Hey, what's up guys? It's Corey here with Dapper Dollars, and today we're going to talk about the two things that are driving Aemetis to $40 a share in the near future. You ready? Let's get started. So, this channel is all about using the online income opportunities like merch by Amazon and Etsy to build our income online, invest this income in things like the stock market and real estate. And if that sounds like something you're interested in, like and subscribe, and let's get started. So, there are two things that happened last week that are definitely driving Aemetis to $40 a share in the near future. And those two things are the carbon capture initiative that they started, the carbon capture subsidiary, and the utilization of their dairy renewable natural gas and the announcement that they have to actually move forward with that from the California government. So these two things definitely impacted the stock, and we're going to talk about those in just a second. But this is also a good time before we get started to recognize that Aemetis is likely in a good position when Wall Street is trying to tell you not to buy them. So you might have noticed in the last few days there have been 2 or 3 articles that have come out saying that Aemetis is overvalued, Aemetis is overbought, and things like that, and Aemetis is not exactly a good stock to own. Now, this is interesting because it's kind of Wall Street's way of tamping down the stock so that it doesn't get overheated and things like that. And honestly, I think it really gives people who are inside traders a good opportunity to buy the stock. And it's a good sign that you're in the right position, because a lot of people said this about Tesla as well. And the facts about Aemetis are that they are a less than $1 billion company in a multi-billion-dollar market. So the growth potential for Aemetis has just begun, and it doesn't seem like this stock is going to cool down anytime soon. It might have some people come after it, like short sellers and things like that, but those are going to be in every kind of stock. However, seeing articles like this, and whenever you know the fundamentals about the stock that we do, it is definitely reasonable to understand or think that it is just Wall Street trying to cool down Aemetis a little bit. And if it happens, then it creates a buying opportunity. And if it doesn't, then Aemetis is going to continue to go to the moon, and we're going to continue to make money. So either way, it's a good thing. But anyway, I just wanted to start off by addressing that, and sometimes it just, it's mildly entertaining. But anyway, so first of all, the carbon capture initiative that Aemetis just came out with and the subsidiary that they announced. Why are they doing this, and what benefit is it actually going to be for Aemetis in the future to do any sort of carbon capture? So what they talked about in this announcement is that Aemetis is going to be capturing carbon emissions from the dairy renewable natural gas plants that they have in their Keys facility, and it is going to be putting that in the ground again so that it is not transferred into the air. Because if you know anything about Aemetis, you know that they are a company that specializes in green fuels, specifically dairy renewable natural gas, by capturing methane runoff from dairy lagoons in California, and California being the #1 population of dairy cows in the United States, means that there are tons of emissions that come from dairy cows, and I think they said around 25% of methane emissions in California specifically come from dairy cows. So capturing this runoff, preventing that carbon intensity from entering the air, is a great thing. However, in the process of capturing this runoff from the dairy lagoons and converting it into renewable natural gas, there is carbon that is put into the atmosphere because there are fossil fuels that have to be used. And so what Aemetis is wanting to do before they actually make the step of getting rid of fossil fuels and running completely on their own dairy renewable natural gas in the future is doing carbon capture to remove that carbon that is put into the air from the fossil fuels that are being used to convert the dairy renewable natural gas, which is great because it is another tax advantage that Aemetis has through the, I think it's LCFS, the low carbon fuel standard that California has put forward. And what this means is that companies and businesses that are in a type of situation where they're putting carbon in the air, have the potential of putting carbon in the air, the amount of intensity they can reduce through things like using green fuels and like what Aemetis is doing is going to give them tax credits to have write-offs for their taxes in the future. So why this is important is because this is another opportunity for Aemetis to keep money on their bottom line by keeping their company as green as possible, because like we said, through the process of creating the dairy renewable natural gas, they're producing carbon emissions, which could actually put them, even as ironic as it would be, put them in danger of being a victim of the low carbon fuel standards that California has passed. So by taking the carbon out of the air, they further lower their carbon intensity and drive the the negative carbon intensity of dairy renewable natural gas down in the future. Now, there is also a great benefit, because what it seems like is the dairy farmers who give their lagoon runoff to Aemetis, or allow Aemetis to have a pipeline to get that the dairy lagoon gas out, they are also held responsible for where or what is taking from their dairy lagoons. So what that means is that a dairy farmer who has cows in a dairy lagoon where all of their poop and pee and everything is going to a dairy lagoon, and they are responsible for what happens there. So if they decide to sell to Aemetis, and Aemetis is creating further carbon emissions beyond what is created from the dairy lagoons, that carbon emission, the dairy farmer who sold it to Aemetis would likely be responsible for what happens after that. With Aemetis doing the carbon reduction and carbon capture, it reduces the carbon intensity that is produced from Aemetis, which means it is more profitable for the dairy farmer as well. And this incentivizes Aemetis to be accepted by a wider range of dairy farmers in their area, because like we've said in previous videos, and I'll link to that here, this is the ultimate goal of Aemetis, is to have up to, I think, 30 to 50 dairy farms in California that are piped to their Keys facility to create dairy renewable natural gas. And like we talked about in that video, this is going to be beneficial for both parties as well, because like we talked about in that video, we're about to go through the life cycle one more time. Aemetis has made antibacterial alcohol through ethanol. And what that means is that grain is taken, fermented, and processed into alcohol to be used for hand sanitizer. That grain is then considered enriched, and the grain is taken to the dairy farms in the surrounding areas, sold to the dairy cows. The dairy cows then eat that grain, create the dairy runoff and everything else for the dairy lagoons, which Aemetis takes and converts into renewable natural gas and then sells that product as well. So as you can see, the more dairy farms that Aemetis is able to get in touch with and do business with, the bigger this symbiotic relationship grows, the more money that Aemetis is able to make in the future, and it is just a all-around great thing for everybody, because the dairy farms get what is considered an enriched source of food for these cows, and likely at a cheaper discount because they're getting it through Aemetis, which is also taking their dairy lagoon runoff and converting that into dairy renewable natural gas. So this is, like we said, an all-around great thing for these dairy farms, and it is going to be a great incentive for other farms to come on with Aemetis in the future. So that is a great thing for Aemetis, and the first of the two things that really are driving this stock up and likely into the $40 range into the future. The second is that Aemetis has been given approval at the end of last week to distribute their dairy renewable natural gas. We know that they have been producing it. We know that they have been in the beginning phases of getting the the pipeline set up, but the distribution channels and the supply ready for the demand that they see in the future with dairy renewable natural gas, because with this they're able to replace liquid and compressed natural gas to power vehicles of their own, and potentially now have this site ready for other people who want to come and fill up their cars or their vehicles with dairy renewable natural gas. So this is amazing for Aemetis because it is a proving point of what is going to be the future for this company. But before we talk about that, let's also address the fact that this is another tax advantage for Aemetis. Because going back to the low carbon fuel standards that California has passed, this means that they are going to get additional tax credits because they're going to be producing this gas and they're going to be running their vehicles and some of their plant off of this gas. So Aemetis is benefiting themselves by their own product, and again further pushing the cash down on the balance sheet and keeping that money in the company of Aemetis, because what we want from this company above anything else is to not be dependent on government grants in the future, but able to actually keep their money they have on the balance sheet to invest back into their own company and business, to fund their upgrades and additions to their company on their own instead of relying on government grants and basically being a zombie company in the future. So with everything that they're doing now, and by having this proving time of producing and distributing the dairy renewable natural gas, it is going to be a great thing for Aemetis potentially. Because like we're about to talk about, it could be a make or break moment for Aemetis, because if they have this ability, or now they have this ability to distribute their dairy renewable natural gas to surrounding businesses and markets, it means that we're going to see finally if this is actually going to be a thing or not. If it is going to be something where the companies use it and they love it, or the companies use it and decide that, hey, it's really not worth the higher price of dairy renewable natural gas, and the tax benefits that we're going to get from this aren't exactly what they're cracked up to be, so we're not going to move forward and we're just going to stick with using carbon natural gas. So that is the situation we're in. Either companies are going to see that the tax credits that they're going to get for using the renewable natural gas aren't worth it, the higher prices of the renewable natural gas, or the companies are going to see that it is worth it and it is going to be beneficial for their businesses to use this dairy renewable natural gas. Now it could be a combination. Since it is interchangeable, you don't have, once you go to these dairy renewable natural gas stations, you don't have to strictly run off of that. You can go to a regular compressed natural gas facility if you want, and then fill up from there. So they aren't tied to one or the other. However, if Aemetis is able to prove this and create enough of a supply that they're able to drive the price down so that it is actually competitive with carbon natural gas, it would be great for Aemetis. But this is somewhat of a make or break moment for Aemetis. However, if you've done the research like we have, you and I have, you definitely know that, or you are confident that Aemetis is going to be able to take advantage of this situation. They're going to do well, and they're going to create a product that is used and be able to be used by other companies and surrounding businesses. Now, everything that I've just said and everything that I'm going to say in the future is just my opinion, though. This is all a guy on YouTube who has done his research and is sharing this with you. This is for entertainment purposes only. This is not investing advice. Consult your financial advisor before you make any decisions about buying or selling stocks. This is just a guy on YouTube, but I do hope that this information helps. I do hope that you're able to, if you're invested in Aemetis, I hope you're able to stick around and see the gains hopefully in the future. We're pushing for $40 a share, but I think that it's well over $40 a share in the future in my opinion. But again, that's just my opinion. So anyway, I hope you guys are having a great day. I hope you have a great rest of the week. And remember, someone is going to do something amazing every day, guys. Why not you? See ya.